Hey guys, it's that Dividend guy here, and today we are really happy. Yesterday we broke 15K, and today we're up 120-ish dollars. So we're at 15.1 today. That's a pretty good jump. I don't actually know why it's jumped so high. I don't really know. I'm gonna look real quick, see total gain loss. We're still down pretty big on Altria still. Oh, sorry. So for the day we're up 121. Sorry, I jumped down. For the week we're up almost $200. For the month we're up $519. Okay. For the 3 months, we're up 764, so 5%. For the year, we're up 5.6%, and all time, we're up 4%. So as you can see, the market fluctuation. So today is going to be really high because we're up really big, right? So tomorrow might be different. It's hard, because remember yesterday we were up, but we weren't up that big. So, oh, sorry. And if you hear whining, it's my dog. Hi, Oliver. Um, but so we're up big, up really, really big. And again, this type of return isn't really normal. We're getting a bigger portfolio now, though, so it's great to see the growth. For me, it's just phenomenal because as you can tell, like all time, it says I had $14,000 in stock market. That's not true. Um, I did not start at 14K. I started with like 8K way long time ago. But um, so the lowest we've gotten down to is 13.9, and now we're back up to 15. Look at that fluctuation. When was that? Let's look at that real quick. That was August 18th. So 2 months ago. Oh, August. Sorry. August, September, October, November, December, January, February, March, April, May, June, July. So anyway, like a year ago, right? Not even a year ago. Not even a year ago, we lost that type of money, or we had that fluctuation. So again, don't when like so with what I'm trying to show you guys here is look at all these ups and downs, right? Like you're up, you're down, you're down, you're up, you're down from that high, then you're down, you're up. Market fluctuations are one of the hardest things to deal with as a new investor. And when you have days like this where you're up considerably, it feels great. But again, try not to get emotionally attached to your investments because this can go the opposite way just as quick as it goes up. In fact, it goes down a lot quicker than it goes up. So, real quick, let's look and see why we're up so high because this isn't normal for us. So, I know AT&T's been on a tear and Target's been on a tear. I know I say that like every video because they're still doing really well, which is awesome. So Ultra Group's down, but it's not down by $217, so it's down less, which is great. Coca-Cola's been up about $50, so that's actually technically down from where it was yesterday. Excuse me. AT&T is up, which that one's been a really big catalyst for growth for me, because the Time Warner assets are finally being realized, which I saw that about a year ago when the acquisition was announced. I bought up. I already had AT&T shares, but I doubled up because I saw the value there. AbbVie, they just had a new acquisition, Allergen, I believe, and they're up almost $200 for me. So what would that be with stock price? So $75. So I'm up about $3 a share. I have 60 shares, so that's probably part of the reason why I'm up so high. It's a $200 gain. Exxon's still down for me, and that's okay. So I did some research on the stocks that have paid dividends, not necessarily increased them the most, but just straight up paid dividends the longest. And the reason that I'm excited about this is because ExxonMobil is in that list of the actual like most like decades upon decades of paying. I'm gonna go down into my watch list first, but I didn't know ExxonMobil had paid dividends for that long, and they've increased them. They're a dividend aristocrat too. So not only do they have steady payment for like 100 years, I think it was, they also are in that top tier of dividend aristocrat status as well. So that's very good. That makes me feel great about holding this stock. Again, I should have done a little bit more research when I bought it. For me, I just bought it because it was a better dividend play for me than IBM. And so that made me feel a lot better. We're going to go down and we're going to show you what exactly I added and why I added it. But Target's up again almost about 250. So that's great. And then Walgreens, I only have one share. but that's approaching a Dividend King status. It's an aristocrat, and that's up $1.40. So for a single share, that's pretty good for a single share of a company being up $1.40 in a day. But let me show you exactly the companies that I'm really excited about. So, and I'll tell you why. So I am really excited about Bank of America. Warren Buffett's been buying shares, wants to buy more shares, and that's going to be my banking pick for like the banking sector. It's cheaper and it's got a great PE ratio. I'm comfortable holding it for the long term. York Water. I added this one because they have paid a dividend, not necessarily increased the dividend, but this is crazy. They have paid a dividend for 203 years. That is crazy to me. They only pay 17 cents a share, but for the consistency of that dividend, of the payment, they've never frozen it, they've never cut it. It's like constant. At least I didn't see any cuts when I looked through their dividend history. But I'm willing to pay that premium. I mean, and it's a utility, so again, they're going to need it in recession, so it's going to be helpful. And like I said, they have paid for over 200 years. They've paid a dividend for 200 years. I know I said that a couple times, but I'm just saying that blows my mind. I didn't even think companies, like a lot of times you think companies like don't keep up with the times, or they get, they get left in the past, or they don't innovate enough. This is one of those companies that has done that for a long time. And it's awesome. So I'm excited to hold it. It's at the top of my watch list because of its consistency. And then we have Eli Lilly, who again is over. They've paid a dividend for like 183 years, I believe. So they're getting pretty close to 200 years themselves. So it's just, and then the third place spot for the most consistent dividend paying is ExxonMobil. So these stocks are number one for how long they've paid a dividend. So this stock has paid a dividend every single year for 203 years. And then Eli Lilly has done it for like 100 and I think 80 years. I think it's 183 years. So again, this is what I'm looking for. And I know I'm a dividend growth investor. So, but I have a lot of dividend growers, right? I have a few stocks per month. I do want to get a Dividend King for 2.5 for the second month of the year. But I have 2 Dividend Kings for the first set of months. I need one, so that would be something like, say, Lowe's or Procter & Gamble or American Water. American Water is probably the one I'm going to go after. But I do have a King for 3, which is Target. So I want to get paid by a Dividend King every single month. So that means I need to add either Lowe's or I need to add Procter & Gamble or American States Water. But first, I want to add, York Water and Eli Lilly because of their tremendous dividend track record. And those are going to be stocks that I'm going to be comfortable pouring money into because people are always going to need meds and they're always going to need water. So, anyway, those are the ones that I've added. I also added Hershey because I love Hershey. I didn't even realize it was a publicly traded company. So that one I'm super excited about. Cardinal Health, again, another play in the healthcare sector. Alliant Energy, this is my state's kind of regulated utility. I pay them every month anyway, so I might as well get some dividends for it, right? International Paper, just a good dividend aristocrat. Love that stock. It's had pretty decent growth. I know the paper industry is kind of on the downward, but they do have a great consistent dividend. Then you got Starbucks, biggest coffee chain in the world, and oddly enough, Coca-Cola, one of my other stocks, owns the second biggest coffee distributor in the world. So that's awesome. Then you have Genuine Parts. So we're back to the Kings here. Genuine Parts is a good play on the auto industry to get some, to get a little bit of exposure to that sector. Sorry, I couldn't think of the word. Get some exposure to the auto sector without being stuck with an auto manufacturer, which if I had to pick one, it'd be GM. But then you have Illinois Tool Works. I think tools are always going to be needed. Trades are kind of on the rise, and that's a good way to play it. So is Lowe's. Home improvement. People are always going to... Real estate is the biggest cash cow you could ever have, right? People always say real estate's built more millionaires or more successful people than any other form of investing. And Lowe's is a home improvement store. And they've actually paid a dividend for over 50 years and increased it. That's why I like them over Home Depot. Even if Home Depot's number one, Home Depot wasn't the number one dividend payer. So I could care less if they're the biggest store. I want the one that's consistently put shareholders first and paid a dividend. Next, we've got Waste Management. Of course, I've talked about this one before, but this is the biggest garbage collecting company in the world. They have a lot of, it's just like Starbucks. They're kind of like the Starbucks of the trash industry, I guess you could say. They've bought mom and pop shop type garbage dispensaries, and they bought smaller ones. They've converted them into their own, and they're monsters. They're super duper big. Next is Procter and Gamble. This is another one of the stocks paid for over 150 years consistently, and they are a dividend king, which means that they've actually increased their dividend for a third of the time that they've been paying it, which is awesome. So they are a dividend king. Also, American States Water, they are a dividend king, and they've increased it for like 63 years now. Then we've got a dividend king in Johnson and Johnson, and another dividend king in 3M. So we've got trash, we've got a big consumer staple, water, healthcare, and then then we have 3M, which they make a bunch of different products. I don't even know what they'd be called. A conglomerate, so materials, packaging, healthcare, and utilities, which is just, that's a lot. So 3M is a great diversified company. So that's my watch list, just to kind of update you guys on the few that I added and why I did that. And then, of course, like I said in the last, I think yesterday, talked about VNQ, just the diversification that I want in the real estate sector, because I don't know it very well. There's a few companies that I've done research on that I would be comfortable, like FRT, and of course O Realty. I love O Realty. I just don't have it on my watch list yet. I think it's overpriced, so I'm trying to kind of focus on the dividend kings for now. And but I would be comfortable with that. Also, Welltower would be one that I want to invest in old folks' homes and stuff like that. I think retirement homes and communities are a great place to put money, but I don't have a lot of extra cash right now, so I'm trying to kind of focus on the stocks that have the most consistent dividend paying first. So that's why York Water, Eli Lilly, and I already bought ExxonMobil before I knew that, but now I'm really excited about that stock. And then I have Bank of America to get my exposure to the banking sector. It's cheaper than some of the bigger players. It's got a great balance sheet. It's got a great PE ratio. Then we have Hershey. I love chocolate. Okay. Then we have the Real Estate Investment Trust, because I want diversification across the real estate market. So those are going to be like 1, 2, 3, 4, my top 5 holdings that I'm going to add. And then as I go down the list, I'll like switch it to the ones that I want the most. Honestly, the stocks that I'm really wanting, like for the dividends, my favorite ones here are Illinois Tool Works, Lowe's, and Johnson and Johnson. But I'll be buying all the stocks on my watch list eventually anyway. So York Water and Eli Lilly are first, though, because of the consistency of the dividend payments, not necessarily the increases, but the consistency that they have brought forth when it comes to actually paying their shareholders. Those are the type of companies that you want to look for. And I've never actually looked into that before, because remember, like I said, I usually go for dividend growth, which there's nothing wrong with that. I love growing my dividend over time. But the other thing you want to look for is consistency with a company. And with Eli Lilly and with York Water, they have paid it for so long, it seems dumb to not have my money there, right? Even if it doesn't grow at a crazy rate, I'm still getting a dividend. I believe both stocks have still had appreciation, I believe. Let me check. Yeah, very good appreciation, up 118% for York Water in the past 5 years. And up, let's look. Up 69.7% in the past 5 years for Eli Lilly. So they're both on the rise over the long term, and that's how we invest. That's how I invest. That's how you should invest. It's for the long term. Screw the micro, price movements. They don't matter. It's all about long-term returns, and we're getting that here. We're doing phenomenal, guys. So happy with the portfolio. Almost at 15.2 today. That is crazy. That is so awesome. So, yay, we're celebrating. We hit 15K. We're almost at 15.2. Soon we're going to be at 16. Like, it's going to keep growing, guys. So, thank you guys so much for watching. It's been that Dividend guy. If you love these portfolio updates, you don't want to miss one, hit that subscribe button. But when you hit the subscribe button, make sure you hit the notification bell so you get notified every time I post a portfolio update, an update on the streaming wars, or stock market news, because I got plenty of stock market news coming. And I'm super, super duper excited about it and don't want you guys to miss any content. So thank you guys so much for watching. I'll have a portfolio update. Tomorrow's Friday, end of the week. Super excited. I'm loving the gains we saw this week. I'm loving the fact that we have Target and we still have AT&T that are just tearing it up, giving us great returns. A lot of times you do have a couple stocks that just boost your portfolio up, and I'm so happy that I saw the AT&T and the Target down, like when they were down. I'm happy I saw the opportunity in the market and I took it. But keep in mind, I couldn't have done that if I didn't have the cash. So remember that sometimes it's better to have some cash on the side, just helping you guys out here. It's just as important to have cash to invest as it is to have cash invested. So you don't want to have all of your money in the market, because then when deals come around like Target or AT&T, for me personally, I couldn't have taken advantage of those deals, right? So make sure that you put about 20 to 25% of your portfolio on the sidelines, so when you see a deal, you can hop on it without having to hesitate or move money over, because if you have to, like Robinhood has like a 4 day or a week or whatever transfer, some brokerages have that where you have to wait to transfer your money over, then you might miss out on that great buying opportunity. So thank you guys so much for watching. I'll see you guys in the next one. Take care and happy investing. So excited we got to 15K. See you guys in the next one.